Hi folks, this is Sean Hyman from Chart of the Day, and I want to talk to you today about how to trade calm markets. Now, how do I know a market's going to be calm? Before major news events like NFP, which comes once a month, first Friday of the month generally, is a calm market because big institutional players will not be present. Only until after that huge economic release will they delve into the market, so it makes volume thin, and they're the big money that pushes things around, so it tends to be trendless or in a range. Another time is on bank holidays. Today you had Columbus Day in the U.S. As I'm doing this taping, which is on Monday, and then you also had Thanksgiving Day in Canada. So you had Canadian banks closed, you had U.S. banks closed, and that tends to make more of a calmer, thinner, slower moving market. And so pairs tend to set up into ranges during those times, like we see right here, more so than sharp trends. It doesn't mean they cannot trend in those times. It doesn't mean there's a 100% guarantee that they won't. But what it does mean is there's a huge chance that they won't, especially when U.S. banks are closed. It really tends to put euro dollar into a range. And the ways that you can trade ranges are you can set up support and resistance points, in other words, a previous peak, go off previous lows, and set that up, and that'll carry out here into what would be the future from these points. And then since the major trend has been upward in euro dollar, I would suggest only taking buys near support or at the bottom of Bollinger Bands. Bollinger Bands look at standard deviations, and when a pair gets 2 standard deviations away, when it goes outside that band, is when it triggers a buy signal, and then you should tend to take profits typically around the middle 20 EMA, exponential moving average. And so it provided a buy opportunity here, and you can sell out here, another buy opportunity here, you can sell out here, another buy opportunity here, sell out here, and then another buy opportunity here and sell out in here as well. So it's provided like 1, 2, 3, 4 just by taking the buys. Somebody can get aggressive and try to sell short. You could short it there, could short it over here, but the thing is, it's a very aggressive move because the major trend is up, so it's more likely to have a trade go against you than it is to go with the trend. It's a higher probability trade to take these buys, since the daily chart, if you flip to it, is in a major uptrend right now. So take the Bollinger Band buys or take the buys near the support zone, and then you would want to generally sell out in a dull market near the 20 EMA. If by chance the trade, you hadn't seen it and it had gotten away from you and it went up to resistance area, then you for sure would want to take action there and cover at resistance, because pairs are rarely going to break much above resistance. Breakouts usually occur in high volume times, in times where there's trendiness, times where there's a lot of big institutional players out there in the market, and on a U.S. bank holiday is not one of those times. So that's how to trade calm markets. Some people think, well, since U.S. banks are closed, there's nothing tradable out there, I can't do anything with it, so I might as well wait till another day. But actually, there is a trade to be made, and it's trading these little ranges. This range from low to high, high to low, and back. We're looking at about from the high 146s to low 148. So it's 120, 125 pip range there, and then these moves you're catching about 40 pips or so each time, and there's 4 of those. So 160 pips worth of movement on this euro dollar hourly chart, and so you can see a lot of money can be made even in the calm times, and that is what we're teaching for the theme of today in the chart of the day. Thanks so much for attending. Bye bye.